Divergence in its traditional guise or interpretation has always been something where it's looked at momentum, and if a trend is up, you've used traditional indicators to say that the momentum is actually falling, and so the trend is likely to end or actually reverse and go back the other way. There's a lot of misconceptions about divergence, and I spent probably 15-20 years working on it in depth, of which there's actually 2 divergence indicators that have been placed on eSignal out of the 7 or 8 that I've built over the years. The reason for that is to keep it relatively simple, and as time goes by other divergence indicators will probably be added. But in the meantime we have 2, and the first one is called time continuation, and it actually takes the theory of divergence and turns it round the other way. And so instead of saying that divergence is being built to say that the trend is ending, we're actually saying that we're building divergence as a continuation pattern. So we already know what the trend is. In this case we're looking at an Apple daily chart and it's up. And what we're really interested in is all the times that we get the buy signals. And I've marked them here, and the ones that have buy underneath have an extra qualifier, which is the peak expansion based on the Heikin-Ashi charts. And what I'm saying here is that if I get a divergence as a continuation, which is those little green diamonds, and it's above the peak support, which is the blue line, or even better if it's actually above the peak resistance, which is the red line, of which the first 2 signals were on the left hand side and also the third signal as well, then I'm going to say that the trend is restarting, I'm going to get back in again. So typically this study is used as a continuation pattern, not as a reversal pattern. You can use it also in terms of taking profits to existing trend positions, and we've just had one appear yesterday on Apple, so I've marked it there. And the reason why it is a qualified exit signal is because this is the first divergence as a sell that firstly is below the Heikin-Ashi peak. There was actually one a little bit earlier in February, but that was the day ahead of results, and the results were good the next day, so we wouldn't typically take a signal the day before. And also the sell signal is from a lower value than the previous sell signal, so there was actually a divergence sell right at the top, and now we've just had another one, and that's of a lower value. So the other way that we can look at divergence as a continuation or as a qualifier for an exit of a trend is to say that the signal is at a lower value than the previous one if we were in an uptrend. This means that all these signals here and here and these ones here are not qualified because the divergence is occurring at a higher price than the previous one. Within the setup there's a couple of things that you can do. First thing is to show all the reversals, which is a proprietary pattern that we include, and in this case they are switched on. We can also have an expansion filter, and if I switch that on and then we click on close, it greatly reduces the signals. So it's a way of saying that not only are we getting a divergence, but when that divergence occurs there's a certain level of expansion in relationship to the current trend to say yes, we're going to take the trade. So what we have is only 3 buys now on the way up, and actually only 2 sales, neither of which were actually qualified. I've now switched to a different chart, which is PVH. I think it's Tommy Hilfiger, so quite a big retail clothing brand. Just going to show how you can combine some of the 4th dimension signals together. There's a buy on the left hand side, and that's simply the power play signal. The reason why I've highlighted it is because it's actually at peak support, so it's the peak expansion Heikin-Ashi. It's held that level and then you had a buy signal. But of more interest is the rectangle on the right hand side, where we see the combination of using the time continuation, in this case as a reversal, and the reason why it's a reversal is because it's a power play signal on exactly the same bar. So where I get a double signal, I could be more aggressive. If I was short, I would definitely be taking all my profits, and if I'm aggressive, I can look to get long.